Hi guys, welcome back to my YouTube channel. So today I am going to be focusing on how to pick stocks. Now this could be even something for beginners, or even if you're experienced as well, I'm sure that you could get something out of this. Now this is not my only checklist, but this is my main one. So the most important thing for myself personally is, when it comes to stocks, is the first thing I look at is the company founder led. That is the most important thing for me, because you need to have a founder who's invested in the company. Not someone who just has a couple of shares and they don't really care about the company if it goes under or anything else. So as an example, Elon Musk has all his wealth into Tesla, into SpaceX, and into all his companies. So, you know, he's got skin in the game and he's got a lot to lose if anything happens. And it just gives you confidence as an investor that the founder or the owner is a long-term thinker. So that's the first thing. The second thing is the company able to scale? Now, scaling is actually the hardest thing that companies go through when they're going through growth, according to Elon Musk. Now, scaling is obviously difficult. So is the company able to scale? If it's not able to scale, then there's no point even speaking about it. Now, you have so many companies at the moment right now who do not have a product, or they have just concepts and they haven't even started production. There's just nothing there. I'm mostly speaking about the electric vehicle market right now. Loads of stocks coming up to the market, loads of massive valuations with just companies which are just empty. There's just nothing there. It's just an idea. They've just made a prototype. They haven't made factories, they haven't made machinery, they haven't even made one car yet. But you have insane valuations. So that's what I mean when I say scalability. Now, just using Tesla as an example, you can see how they can scale there, or how they've been scaling over the last few years. Now, that's the only reason that Tesla has actually gained a lot of traction, just from when they're ramping up the scaling period. Now, as you can also imagine, Tesla is not even halfway there yet. They've just started to ramp up now, and Tesla is almost, I'm sure it's 10 years plus company now. So it's been here. Tesla is not the oldest company in the world. However, you can see how difficult scaling is if Tesla is only just starting to scale now, especially in the automotive industry. Now, another example is Lemonade. Now, Lemonade, the insurance company that are taking things to the next level with AI and other technologies. Now, the reason I am a fan of Lemonade is because they also can scale very easily. Now, as a software company, and when they deploy into different countries, it's literally, they just have to meet the regulations, and that's it pretty much. Now, they don't have to have offices physically in each market, so they can go from the US to the UK to France to Germany and so on, without actually having offices there, which makes it really easy for them to scale. After I've answered those two things, then I'll go into my checklist, which I'll show you right now. So here we have my stock checklist. So like I said, the first two things which I look out for is the company founder led, and also can it actually scale? Those are probably the two most important things to me. So after that, then we go into the checklist. Now, this is not everything. As you can imagine, this is just kind of like where I start off my research, essentially. Now, another thing as well, just to point out, which is not on the list, is that I also, go through multiple interviews of the CEOs, just to see where the vision is coming from and going, and also where they are up to date with regards to the vision, with regards to the product map. So it just helps me to kind of make a more informed decision. So the first thing is leadership. So like I said, is it founder led? If yes, then I go to the next thing. Is it quality product? You can see, for example, Apple is a very good product. Lots of people like it. It speaks for itself. It solves itself. When it comes to stock checklist, the first thing is leadership. Now, leadership is the one which I mentioned earlier on. And then we have quality of products. Then we have growth opportunity / product roadmap. And what I mean here is how much more can the stock grow? So if you have a company that's in a really stagnant industry, that's already kind of like already grown, it's probably too late to kind of probably get into that. So you kind of need a company that's got a very long roadmap. So for instance, you have Tesla, of course, they're making cars as the primary thing, and then they're also making software for the cars as a second thing, or arguably as also a first thing. And then they're going into batteries, they're going into battery storage, energy storage. They're going into various different things. Now they're going into full self-driving as well, FSD, which is autonomous driving, which is where really the majority of Tesla's qualities are going to really shine over this decade, in my opinion. So that's kind of like what I mean when I say the product roadmap. Has the company got a lot of opportunities to kind of grow, or are they kind of done and they're just churning out just revenue day to day with no real growth? And then we have growth type. Now this is just basically, is it the growth type? Is it from a fan level, or is it from kind of like an aggressive level? So when I say fan, I mean, again, Tesla owners, they tell their friend, family, oh my God, look at my Tesla. Let's go for a test drive, so you can see how good this is. Oh my God, this acceleration. So Tesla owners are fans of the cars. Now they rave about their cars all the time to their friends and family. And what happens? The friends and family end up also buying Teslas, and it just kind of goes up from there. And you also have companies which are just really aggressive. Every single thing they have to spend money on to get clients. Now this is not necessarily a bad thing, because you have all companies that are very different. So for example, we have Square, which is a payments company. They just released their earnings, and they spend $5 to acquire a customer, and that customer gives them $40 a quarter, which is really good business. So it doesn't have to be necessarily zero marketing, but it can be just more efficient marketing potentially as well. So that's what I mean by growth type. Then we have barriers to entry, which is self-explanatory. The only thing which I'm going to focus on here is, if it's a big brand. So for example, we have Nike here. No one's really going to disrupt Nike in a significant way, and also network effects. So on Facebook, every time someone joins Facebook, Facebook has more value to it. So one, Facebook has more data or more people as more people join, and two, the more people that are on Facebook, the better. Everything improves. For example, if you're looking for, finance groups, the more people on Facebook, the more likely you're going to have more finance groups, or whatever your interests are, you're going to have more. So the more people that join Facebook, the more value that comes from Facebook for the person who joins Facebook, and also for Facebook themselves as well. So it's kind of like a win-win, and it just kind of like just goes in a network effect motion. So it just kind of spread out. So that's what I mean here by network effects. And again, we have dominance in the marketplace. Again, there's Apple as an example, but you also have Tesla, in my opinion. Now we also have ICE vehicles manufacturers, the main ones like BMW and all the companies pretty much. Of course, they were first to the automotive market. However, Tesla has taken over for sure when it comes to electric vehicles. Some of them, they're only just starting investing now, whereas Tesla's been in the game for a long time. So Tesla is kind of like dominance in the electric market vehicle, which just means the barriers to entry, it's extremely high, and you're not going to get a random company just joining the EV market thinking that they're going to take over. So yeah. Then we also have, I don't really focus on balance sheets as much and valuations, to be honest, because the type of companies that I go for is mostly growth companies. So, roughly, is revenue going up year on year? Yes. Okay, good. I mean, most revenue does go up year on year, but it's going up quarter to quarter as well. That's also another thing to just focus on a little bit as well. Not so much though. So for instance, again, using the example of Square, ticker symbol SQ, they had a really good year in 2020. However, actually in Q4, their revenue did not change, I believe. So what they had in Q1 of 2020 was the same revenue they had also in Q4. So there wasn't any real growth there. However, overall, year to year, that did have growth. So it's just little things just to take in mind. I mean, it doesn't necessarily mean anything too bad, but it's just good to kind of dig up on it and see what the reason could be there. We also have cash. Again, does the company have a decent amount of cash in case something happens? So, what happened last year in March, we had lockdowns. Was the company able to survive and kind of go through that whole lockdown and pay the employees and keep it on the books and just wait until the economy goes up? Of course, last year was kind of an extreme, but yeah, cash is always good to have on hand as well. It also means that they're able to make investments. Now, whilst we're on revenue, Another thing here is that I don't even look at, to be honest, is profit. Now, profit is if it's a growth company or growth stock, I mean, they're not really going to have a lot of profit. Their main focus is going to be growth. So they're going to keep investing into into themselves, into the R&D, which means that the profits are not going to be there for a while. And again, that's what Wall Street doesn't like. That Wall Street just looks at profit and loss. Is a company making a profit? Are they growing? But for me personally, when it comes to growth stocks, technology stocks, they have heavy R&D, so they're going to be spending a lot of money when it comes to R&D, which means that the actual bottom line profit is not there. Technically, they are profitable, but otherwise they won't be able to invest. But yeah, so another thing that's important is the market cap revenue, so price to sales. Now, if it's too much, then again, it won't necessarily mean that it's a bad investment in the overall grand scheme of things, but it just means that the amount of growth you could get from that won't be as much. So it just means everything is priced in. So for example, if Tesla right now is say $1,000 per stock, you have a lot of things that are already priced into that. So for example, everything that's going to happen in the next few years is already priced into the $1,000, which means over the next few years, it's probably not going to grow as much compared to, for example, if you caught the stock when it was even $500. So that's what I mean by that when I say the price to sales as well. And again, kind of obvious as well, so total addressable market. So how big is the market they're trying to go into? Of course, a couple of trillions preferably, or a few hundred billions preferably, just because, you know, there could be many players. So for example, we have Lemonade, again, the insurance company. Now they're going into the insurance market, which is, I believe, if I'm not mistaken, one of the biggest industries in the world. So, you know, they're obviously going to be a leader in their little niche in terms of, you know, what they're trying to do with AI and stuff like that. However, if someone else comes, the market is big enough for other people to kind of come in and also do well. So I don't really see other companies as a threat to Lemonade, for instance, just because the market is so big. Another thing as well, just to mention, is even other companies like Tesla. Now they also are in a massive market, the EV market globally. It's a huge market with a couple of trillions, I believe. So, with hundreds of billions. So it's just good to kind of focus on companies which are in a massive market, because obviously the opportunity is bigger. So just to summarize, the best stocks for me personally are the ones that have good products and services, and products and services that the customer not only like, but also kind of are fans of, so they kind of tell their friends and family about every time they purchase or have an experience with that service. For me, that's actually one of the most important things. And also I think having a leadership is really probably my kind of hack to kind of finding good stocks. So if you can find a company that's founder led, that founder is invested heavily into the company, and they think long term and they speak long term, then you know that the company is likely to do well over the long term. And at the very least, the founders or the leadership has the best interest of the company at all times. Now, obviously, there's way more research for you to do. Like I said, another thing I do is listen to all the interviews available with regards to the leadership of the company, podcasts, videos, any press releases, anything else like that. So there's a lot of work, but I think this could be a starting point to you finding some really good stocks. Now guys, hope that helps. If you enjoyed it, please do give it a like and also subscribe if you haven't. And guys, I'll see you in the next video. Thanks for watching.